So I've always thought the asset management industry has the potential to play a really key role in society because it channels capital from savers and investors to where it's really needed in the real economy. And if we do that channeling of capital well enough, then we sort of create and enhance returns that help investors save for their retirement. And for me, that holds real purpose, the ability to work in an industry where my small contribution can help investors achieve financial security. But of course, if the industry as a whole is going to achieve its purpose, it needs a few key ingredients. It needs healthy competition, it needs a constructive regulatory backdrop, and it also needs to operate in an environment where we see continual improvement and ongoing professionalization. And then, of course, the industry is always impacted by the prevailing investment backdrop, and that changes, from time to time. So as we reflect on the last 5 decades that we've been in existence, it would be remiss for us not to talk about the overall industry. After all, we're not an island. We operate in an ecosystem. And we wouldn't be able to achieve our purpose for clients unless we operated in an industry that was healthy and robust. So that's what I intend to talk about. I want to talk about the 4 key trends that I think have shaped the South African asset management landscape over the last 5 decades. So the first key trend is a changing investment landscape. And since we were founded in the 70s, the investment landscape has undergone significant change. And if you think about it, when we were started in 1973, the environment was characterized by an uncertain political backdrop and high inflation, which actually is not too dissimilar to the environment in which we find ourselves today. And when I think about these environments, I often think about it as a paradigm, and each paradigm has a certain set of rules, the rules of that time. And while we're not a business that actually is really focused on making, precise macroeconomic predictions, we do think understanding the rules that prevail in each time or each investment backdrop is important for 2 reasons. The first is probably the obvious one, because it allows you to understand what your opportunity set is, both what you need to invest in and also what you should be avoiding. But second, and it's often an underrated one or underappreciated one, is that it really influences how we all as investors tend to behave, because we often become very anchored by the rules that prevailed in the last regime, and our risk appetite tends to wane up and down, depending on whether the market is optimistic or pessimistic. The second key trend, which has impacted our industry, is the change in the regulatory environment. And whenever we hear regulation, we do tend to groan, but actually regulation, if it's designed well, should protect investors, it should mitigate risk, it should boost confidence in the overall system, and all of those factors should help enhance overall outcomes. And when I think about the South African savings system, we know that the problems really are multifaceted, which face South African savers and investors. And so it would be naive to think that these problems could be fixed by regulation alone. But regulation can certainly help, particularly in enhancing behaviors and protecting investors over the long term. So when I think about the South African regulatory environment, there are 2 shifts and changes that we should be aware of, and they impact investors and clients in different ways. The first is actually just a change in the way in which the regulator is approaching regulating institutions, and that's called the Twin Peaks regulation, and it establishes 2 regulators, one that focuses on monitoring risk at an institution level, and another that is specifically focused on monitoring conduct and ensuring that consumers are treated fairly. Second regulatory shift is retirement reform. And retirement reform has been underway in South Africa for at least 10 to 15 years. And it's focused, again, on sort of reducing complexity, protecting investors, and really enhancing the degree of preservation that we see in the system. And one really topical part of that is the so-called 2-pot system, which aims to balance a limited need for flexibility so that you can draw in an emergency circumstance, but while still, with the primary focus to ensure that we can preserve savings and invest to allow for those savings to sustain us in our retirement. The third key trend which impacts the South African asset management landscape is the competitive environment in which we operate. And as clients, you might be wondering why this is relevant for you, because surely it's only relevant for us as a firm. But what I would say is that a healthy degree of competition is great for all clients, because practically it actually raises the bar for everyone who operates in the industry. And it also tends to lead to better transparency and disclosure over time and a lowering of costs kind of across the value chain. And when I think about the South African competitive landscape, there are probably 3 points that I would raise. The first is that it's certainly true that the industry has become less concentrated and much more competitive over time. Secondly, if you believe that a hallmark of healthy competition is increased transparency over time, then this has certainly been evidenced in our industry through the kind of widespread acceptance of voluntary but very well supported disclosure standards which enable investors to compare costs across retail investment products. And the third is that what it takes to have a competitive edge, I think, has subtly evolved over time. It used to be about sort of finding information that you had to uncover to form a view. And now it's increasingly more around cutting through the noise created by a sea of information that is perhaps all too readily available, to focus on what's really important to make long-term decisions. The fourth key trend is the role of intermediaries and that of distribution channels. So at the beginning I said we all operate as part of an ecosystem, and each player tends to compete, collaborate and engage with the other players in the industry in the provision of products and services to end investors. And one key part of this overall ecosystem is the role of advice. The advice industry has also evolved substantially from being largely product-led to making the client's life and holistic planning the center of the conversation. And yes, while disruptive technologies and regulatory change will undoubtedly continue to present challenges, we do believe that advice and the role of advice will continue to play a very important part in ensuring a healthy investing environment. So as we reflect on this 50-year milestone, and I think about the significant changes that the industry has undergone over that time period, I'm also reminded that our job actually is simply to navigate through these changing times and to, yes, evolve and improve alongside it, but also really importantly to stay true to the fundamentals and the principles upon which the firm was built. So I've spoken about what it takes to maintain a healthy investment ecosystem, and we recognize the important role that each member of the industry plays in pursuit of that. And from Allan Gray's perspective, we commit to continuing to act responsibly, to promote transparency, a long-term orientation, and to firmly put your interests, our clients, at the center of everything that we do.